Good morning from Chicago traders. Hopefully you can hear me loud and clear this morning. Thanks for joining me here again. We missed 2 days in a row of non-vacation live streaming. That is a record, folks. In almost 2,000 videos, we've never had a technical issue that held us back for 2 days in a row. So here, we're breaking records. Thanks for joining us today. This is episode number 1953. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Happy Friday, all. Hopefully you had a very productive week. Let's dive right into this. We're going to take a look at the Convergent Trading pre-market summary sheet. We've had some selling going on. One word of warning here is that it is rollover. The official roll started yesterday. And I am quoting June 2021 for everyone that's listening. Your charts may be confusing when compared to mine if you have not rolled. I do roll with the exchange, even though it's slim pickings in terms of volume, but it's still tradable. And I just don't fight my analytics platform, or data feed, IQ feed. And so I don't fight it. So it rolls with the exchange, the official roll, and it adjusts my prices accordingly. And I just don't fight it. But it does knock me out of using the delta, and the volume profile is, of course, not the same for one day. But it's okay. It's just, in general, the roll is not the best week to trade, to be honest with you. So here we are looking at what is in front of us. Today, we've got silver taking a beating to down 2.51%, 25.53.5 is the current price, down 66 cents. And the NASDAQ follows. The NASDAQ's down 1.59%, or 209.5 points. Overall, the market's been really jittery, especially these mega caps. I'm sure many of you have been watching Tesla really add volatility to all these index funds and fund managers who are holding it. The thing is really whippy, and it carries a lot of weight. It's the third weighted, most weighted stock, or fourth most weighted stock currently in the NASDAQ. So that's where we stand. The only thing that I have that is up is the U.S. dollars. You can see there, trading currently at $91.84, even 42.5 cents up on the day, 0.46. The Dow is holding on to its winnings, up 48 points. Industrials relatively strong. Yesterday, the techs were relatively strong. So that's where we stand this morning. Not much to say other than what's on display here. Of course, you can get this when it first gets published by going to twitter.com/conv trading and following that account. You'll get it in your alert box for Twitter every morning at 7:50 Central, 8:50 Eastern. The only thing we're looking out for today is the Michigan consumer sentiment prelim. This is likely to be a mover. The prelim moves us more than the final. That's at 10 o'clock today. So far in the S&Ps, it says 248,000 on the overnight volume. That is on the back contract. The old contract, the new contract, the June M1 contract has 159,000. Same range, same inventory, down 40.7 short. And that's where we stand. We have a very clear double distribution profile. We'll go over that. There is no review segment, of course. It's been several days. I did post yesterday the scenarios. In fact, I might pull that up and use that just so that we have a quick review. Where is that thing? Here it is. Boom, boom. Open incognito. This is what I expected yesterday. I posted this on Twitter approximately 9 or 8:30 or 9 Central yesterday. The primary scenario and the argument or the comment that came with this, in fact, you can see it here. You can see it's posted at 8:39 Central. The comment is today's scenarios, expecting scenario 1. In scenario 1, a push to all-time highs in the new contract, which is around 35 and a quarter, as it is well within the daily range stat. So the expectation yesterday is that we would open, we would attempt to close the gap, but not likely, and then rotate higher and push into the all-time high, which is also a weak high, as noted there on the image. Let me enlarge that for you. As noted on the image, weak high from 216. Here's what actually happened in our review segment. Again, the volume's anemic here, and the chart may look weird because it was the first day of rollover. And here we are. We open up in a completely sideways two-way auction. We push sideways. We pull and break the OS low. So the OS low, the opening swing, is very simply the first swing, the first high, regardless of time. The first high where sellers step in, and the first low where buyers step in. And generally, we want to see it swing to the other side through the open to get our opening swing. This is not the same as an opening range trade because those are constrained by time. We're simply looking for where do sellers step in for the first time on the market on open orders? Where do buyers step in on the first time with market on open orders as well? That determines our opening swing. And what we have is what's called an OAOR, open auction out of range. If you are confused by this stuff, I know I'm talking my book here because I founded Convergent Trading with others, but just take a month so you can go through the webinars. There are probably a few hundred webinars there, but there are some key webinars that go over this stuff so you can understand the auction in your product. And this applies to Forex, your CFD trading if you have that, your equities. They're all the same. If you're intraday trading, these are important milestones to understand. So once we come in and we have an open auction out of range, we test below. So you can see it breaking below here. And that was the little attempt I showed here. That was the little attempt to go down a little bit. Let me change this pen. It's really annoying. There we go. That was the little attempt down before we get the first push up, the first impulse up. Again, this is what actually happened. This is our first impulse up. Pulls back to VWAP again. So we have a full session VWAP test, full session VWAP test, and then boom. And by the way, this break here, we did put in the OS high at 39.25. And then you don't see it here. It's a 4-tick Renko, but this was a really nice little consolidation zipper. And then just an explosion upwards. What has happened here is the market has opened. It did not respond, so we have gap rules here. Gap rules say if we don't respond early or don't sell off early, if we're on top, or don't buy up early if we're coming in, if we're gapping below. In other words, if people don't come in and see immediately that, wow, this thing has popped higher, let me sell my longs or let me get short because it's overpriced. If that doesn't happen early, generally we're expecting initiative buying, and initiative buying into new all-time highs. That is a formula for getting killed if you get short, and that's what happened to anybody that got short yesterday. Hopefully you're not one of these, and if you are, all I could say is it's okay, but make sure you learn from it. But we have this consolidation against the initial balance high. The initial balance gets put in at 25, and we have the strong explosion. This is a sit and wait, and of course we take out the all-time high. That's this stock zone here, and push through to where? To the measured move high at 47.25. This is a projected price. We use measured moves when we don't have an old auction to refer to. I'm always referring to the past and looking at how the market auctioned to get an idea of how the current traders and participants are progressing compared to how we progressed in the past. This is what profiling is about. And when we don't have that, we project using fib projections, and the goal is to have several swings align, and then we create this measured move target, and you see it there marked MM at 39.47. We push through by about 7 ticks, and that's the top. So pretty spot on. Pulls back to the prior high, prior all-time high, which was a weak high, a small double top. Used to be 45.5, I believe. And then it starts to fall back in towards the RTH mid and VWAP to finish on top of the IB, right in the middle of the range. Beautiful setup here for a market that is undecided into the close. So that takes us into the close. Just give me 1 second here. Sorry about that. So that carries us into today. Today, we open back up. We immediately push higher. We go sideways, and we put in what is a weak high in the overnight session at this 39.37. Again, 39.35 was the all-time high. So we're not able to get above that that stock zone. The stock zone is the gray bars. These gray bars are for today. They're not for yesterday. They're updated. They're uploaded to the cloud, and anybody that has access to them, it updates them on their chart, whether it's Sierra, Ninja, Investor RT, Bookmap. Anyway, we checked this price multiple times. You can see there's a weak high building here, and then we finally sell off right when the Europeans come into town here, and we have a double distribution profile. Volume's very low, but this is June volume, so it actually is relatively decent volume. We still have pretty good volatility, and as I had mentioned to the folks in the Head Trader channel who are viewing the Head Trader channel at Convergent, we are testing the full session mid from below, expecting it to hold this 39.19, expecting it to make a run at the 3900 again. The low is 3900, the century figure. Notice it's in the June contract. In the March contract, this is 3909, which is really an important area. We've talked about 3909 quite a bit. So both of these prices, the 3900 in the June, 3909 in the March, these are still important prices, key areas, lots of volume in these areas. But if it slips through here, it's likely to push through to 38.94 in the March contract, 38.88 in the June contract, and that brings us back into equilibrium, into the big acceptance and balance area. That's basically the overview of the day. The delta is mostly negative, but it's, as you all know, because you're really sharp and you're following along very closely, you don't pay attention to Delta or much attention to Delta or to volume in general, starting yesterday all the way through to next Friday, quad witching Friday, when the contract expires. This period here has people moving their positions from March, selling March, buying June, or buying March, selling June if they're short. Everybody's transitioning their positions in, and since we only have one exchange, we don't do dark pools, we don't do different ECNs, we don't buy direct contracts direct. Everything goes through the exchange so that everybody's on the same level playing field with the same information. Therefore, anybody that's rolling their contracts forward, they're going to hit the exchange, and so that's going to show up in our delta and in our volume. So we have to lay off the idea that we're monitoring the delta during this period of time. So we are in the gap zone from yesterday, which was, again, in a June contract. And I hate saying that because today's the last day that people are trading both March and June. You should roll today 3909.50 to 3906.50. We have a gap, and we are right at the gap mid at 3908. So we are breaking the one-time framing up. So we have been one-time framing up. It's triggered down here, higher low, higher low, higher low, higher low. And then we were monitoring, and we talked about this quite a bit, that we're monitoring for it to break the one-time framing down on the weekly. These boxes represent weeks, each box, and the gray, the dark gray versus the light gray represents a month. So we can see for the month how the one-time framing moves. We can see for the week how the one-time framing has been moving down. And then this week we broke the one-time framing going down, and we pushed through the high of last week, which is currently at 02 quarter, which was at 39.12.50, I believe. In the March contract, we broke through, and that's why the prediction yesterday was for all-time highs. Once we do that, we are reversing the weekly time framing, and we are likely to get some follow-through to the upside, and we did. We sure did. We pushed to the mid-century at 39.50 in the June contract. We stopped at 39.49, and now we're breaking the one-time framing up by taking out the low, and we are likely to follow through to the downside today. So I am suspicious, so to speak, or skeptical of longs today, short term. Remember to always put the time frame first. From the person who's speaking, you need to identify their time frame for their trade, the time horizon for their trades. And in my time frame, it's just day trading only. And today, we're likely to see resistance as it tries to push higher unless it clears yesterday's closing price. Once it clears yesterday's closing price, it opens up the door for further pushes. The closing price yesterday in a June contract was 39.27. I'm sure you knew that. So today, where am I expecting it to go? Right there. See that balance right there? That's at 38.88, 38.85 area. And this is, which was 38.98 in the March contract. It's like just doing this flip. I'm imagining the old chart versus the new one. I've got these charts memorized. You should have them memorized. As you trade, that's what gives you confidence to hold your trades through, understanding the auction and the flow. So I'm expecting it to push down. So all that jabber, talk. Let's switch and look at what's expected for today. I'm sure you guys are going, wow, this guy's talking 10,000 miles a second. But I'm catching you up on what has happened over the last couple of days since we missed. And let's take a look at what we're expecting today. These charts are going to look off to you. I suggest you check my highs and lows versus yours. because of rollover and price adjustments, so you can make sure that your charts are correct. I know mine are. So what are we looking for today? For today, on the primary scenario, open auction, probably in range of yesterday's low. Expecting this to be responsive. Oh, you see that? We just shifted the overnight point of control down. I'm expecting an open auction. I'm looking for it to be responsive. It's likely to be responsive into the 39.13 to 39.15. Expecting some resistance up here. I'm looking for it to run an impulse down, and then I'm looking for this tests of 38.88 for a quick splash through. I'm going to be conservative with my projection for range. The range I'm expecting is 15 to approximately 39.15 to approximately 38.81, and then I'm looking for the bounce into the close and into the weekend. So the primary scenario being the short side. Why? Well, that's what I've been talking about for the last 20 minutes. Where have you been? But I'm looking for this thing to reverse. The secondary is an immediate push, chop down into the 3,900, consolidate at 3,900, get down towards the 88, catch a bounce as buyers step in, seeing value back into the overnight point of control, and then a squeeze to just above into the low volume node, the double distribution low volume node, and then a test of yesterday's close at 26. So I'm looking for 26 up here on scenario 2 for it to stall out into the Friday close. Okay? You got this? I think you do. That's what I want to leave you with. This is not the Friday where I ask you where you're located. We'll do that next week, every other week. Otherwise, everybody just starts typing their city every time and it gets boring. But hopefully you picked something up today. Just remember, follow the auction to the point where you are the auction. I sound like Yoda. Be auction you will. No, I want you to memorize, follow the auction enough to memorize the map. Memorize the map. You should know what it has tested, what it has not, where it failed. This is so important if you're trading. Coming in and just staring at a screen and looking for support, resistance, and action, price action levels, that's okay. But if you memorize and if you follow along, you'll naturally memorize what's going on. This is some trader wisdom that is reserved for my prop traders, and I'm giving it to you here. Just understand the map. Understand the map, just like you know where your nearest gas station is, just like you know where your nearest grocery store is, where your nearest hospital is. You don't need Google Maps to get there. You want to get to that point where you're kind of a professional and you have it memorized and you can see what's going on, the flow of traffic and so on. Good luck, and I'll catch you tomorrow. Have a great weekend. Take care. Not tomorrow. I'll catch you Monday. I won't be here tomorrow. Take care.